This is my latest withdrawal for my best month thus far in 2024. Every single trade taken live in front of hundreds, if not thousands of people on a daily basis. And in this video, I'm going to reveal the simplest strategy to use to replicate these results. It's a big promise, but I plan on delivering every single bit of it by giving you the exact steps, chart patterns, and even the smallest details like time frame to copy and paste for yourself. I've taken over 400 trades this year and backtested this strategy extensively. It used to be a complicated mess of chart patterns and lines, but I've simplified everything into 4 key concepts. Once you master these 4 key concepts and put them together like how I'm going to show you, you will be able to consistently replicate my trades. Before we get into the hundreds of trades of backtesting, we need to understand the logic behind the strategy fully and why it works so well. So let's get right into it. Let's go over the 4 key concepts. Number 1, you want to identify the Asian session range, which is from the 8 p.m. to the 12 midnight Eastern time. The Asian session range is important because it sets the tone for intraday price action. Depending on what price action does during the Asian session, it can influence the London and the New York session as well. For example, if Asian starts to expand, then you can expect the London session to consolidate. If the Asian session consolidates, then you can expect the London session to utilize the liquidity built up during the Asian session for an explosive move. How do I know this? Well, I've seen this scenario play out almost every single day for the past 6 years. So if the Asian session ends up expanding, you do not want to use this strategy. This is because the London and the New York session are high volume sessions. Big central banks and financial institutions in those parts of the world are not actively trading just yet. So this strategy aims to take advantage of the liquidity resting above and below the Asian range. Number 2, look for price to break above or below the Asian range high or low, otherwise known as a liquidity sweep. A liquidity sweep happens when buy or sell orders gets triggered, causing a quick price reversal and leaving a long wick behind. In this strategy, we target these key levels for potential price moves. If you want to learn more about liquidity, then check out this video after this one. You have probably heard of the third concept, change of character. And here's what it means. A change of character happens when the market shows signs of reversing. In an uptrend, a lower low suggests a potential reversal, while in a downtrend, a higher high signals a possible shift to an uptrend. By analyzing market structure, we can identify trends. High highs and high lows indicate an uptrend, which means we are going bullish. And lower highs and lower lows point to a downtrend, which means that we are going bearish. The final concept, and arguably the most important, is the fair value gap. A fair value gap is a 3 candlestick pattern. The space between the wick of the first candle and the wick of the third candle, right over here, creates the gap. This area contains unfilled orders, so when price returns to it, those orders will get filled. Price then typically continues in the same direction for a bullish fair value gap. You want to see the following. You want to see a gap between the first candle's wicks high and the third candle's wicks low, right over here. For a bearish fair value gap, you would want to see the opposite, a gap between the first candle's wicks low and the third candle's wicks high. Now that you understand the concepts, I'm going to give you a 4-step checklist on finding the perfect entries for your trade. Number 1, we are going to use the 1 hour and 15-minute time frames for higher time frame analysis. This is where we mark out the 1 hour and the 15-minute unmitigated fair value gaps, which simply means fair value gaps which have not been tapped before, not tested. Now, we want to see these fair value gaps prior to our Asian range time window and our Asian range high and low. Number 2, we're going to use the 5-minute time frame for our entry execution. After the Asian range high or low has been taken out or a higher time frame fair value gap has been tapped, drop down to the 5-minute time frame. Here, we want to see a change of character to target a 1:2 risk to reward ratio, or the opposite side of the range. For example, if we took out the Asian range low, we target the Asian range high, and vice versa. Number 3, you should stop looking for entries at the 4 a.m. Eastern Time, or if the Asian range is more than 20 pips. Avoid trading on days with major news events like non-farm payroll, CPI, and FOMC, as the markets can be unpredictable. To protect yourself from losses, we'll filter out any setups that breaks these rules during backtesting. Number 4, we are going to look for low risk, high reward trades. From my experience, using this strategy, we want to aim for a minimum of a 2R. That means for every $100 that I risk, I need to aim to profit at least $200. And therefore, every trade taken in the examples later will be aiming for at least a 2R. R stands for risk. There are certain scenarios where you can aim for more, but you will see how that works later in the backtesting session. I know what you must be thinking. Isn't this strategy too simple to become profitable? Listen, the more random stuff you add to your trading plan, the higher chance you have encountering analysis paralysis. Analysis paralysis is where you may have 3 confluence that says buy and 3 confluence that says sell, and you end up just not trading at all and not making a single cent. One thing that has helped me personally is keeping everything super simple and mechanical. So when I see my entry, I just take it with the same risk parameters. Now, if you're still a bit confused about how this strategy works, let's take a look at a few real examples to solidify your concepts. For data collection's sake, we are going to risk $500 per trade in these backtests. We are also going to take down notes of the RR of each trade, our potential risk exposure, and our net profit and loss for each trade. Let's start with day 1 of the backtest. Okay, so here we are on the Euro US dollar chart. Like I said, the first thing we have to do is mark out our 1 hour and 15-minute unmitigated fair value gaps and our Asian range high and low. Right over here and right over here. Now, you can see that we do not have any unfilled fair value gaps. So we will just mark out the Asian high and low right here. Let's wait for either sides of the Asian range to be swept. As you can see, price moved up and took out the Asian high. It swept it, creating a liquidity sweep. Here, we have a 5-minute bearish change of character once this swing low had a body candle close below it. This swing low is significant as it was the most recent high low that was put in by the market where it was initially in an uptrend. Once that happens, we simply set our sell limit at this change of character level right here, with our stop loss placed above the swing high, right over here, targeting a 1:2 RR. The reason why we want to have our stop loss above this high is because of the fact that if price action breaks out of this range right here and takes out this high, we are creating higher highs and therefore the sell setup is invalidated. So let's see how this trade plays out. There we go. TP smash. Bread and butter entry. Let's move on to the next day. Alright, here we are on the second day. Right here on the 50-minute chart, you can see that there isn't anything much else apart from the Asian range high and low. So let's mark these out right here. On top of that, you can see that there is no unmitigated fair value gaps spotted at all. So we wait for either one of these levels to be tapped before we drop down to the 5-minute time frame. There we go. The Asian high has been swept once again right over here. So let's drop down to the 50-minute time frame to look for entries. Now, what we're going to look for is for a change of character. Since we had the Asian high sweep, we are looking for a bearish change of character, and we get that right here, where the swing low has a body candle close below it, indicating that we have switched from an initially bullish trend to a bearish one as a result of the sweep of the Asian high. Once again, rinse and repeat. We set a sell limit right over here at the change of character level with stop loss at the most recent swing high, targeting a 1:2 risk to reward ratio. you will notice that our target is slightly below the Asian range. Now, this is something that you must take note of. I would take majority of my positions off the Asian range low, right over here, and leave the rest running to my full take profit. The reason why is because the Asian low tends to be a point of reversal. So I prefer securing profits and putting money in my pocket. So now, let's see how this trade plays out. There we go, TP smashed. Now let's move on to the very next day. Day number 3. Once again, we start off the analysis by marking out the 1 hour and the 15 minute unmitigated fair value gaps, as well as our Asian range high and low. As you can see, we have this unmitigated 15-minute fair value gap right over here, just slightly below the Asian low. Normally, we would just drop down to the 5-minute time frame where we swept either side of the Asian range. But the unmitigated 15-minute fair value gap is so close to the Asian low. This tells me that price action is more than likely to be drawing towards the Asian low where the fair value gap is before continuing higher. So all we got to do is wait for the fair value gap here to be tapped instead. Right over here, price taps into it, and therefore right now we can drop down to the 5-minute time frame. So what we want to look out for right here is for a bullish change of character, since the low has been taken out and of course a bullish fair value gap has been tapped. So where do I see the change of character? Right over here, when this swing high is broken with a body candle close above it, as that swing high was the most recent lower high in the initial downtrend. So we set our buy limit here. Once again, stop loss at the swing low, targeting a 1:2 risk to reward ratio. You would notice that our stop loss right here in this example is especially small. So a 1:2 does not even target near the Asian high. Remember the previous example? We took partials at the Asian low. In this case, this is where you can really stretch your take profit to the opposing end of the range. Look, you won't get setups like this very often. But when they do appear, you want to make sure you squeeze every ounce you can out of this setup. Alright, so let's see how this goes. There we go. It hit our full TP, netting us 6.3 R. Now let's move on to day number 4. You're going to want to pay attention to this. Once again, the first thing here we have to do is to mark out the 1 hour and the 15-minute unmitigated fair value gaps and our Asian range high and low. We have this unmitigated 1 hour fair value gap here, and the Asian high and low are here and here. Now let's wait for either sides of the range to be tapped. As price moves, you can see that we have finally swept the Asian low. And right here on the 5-minute time frame, we have created a change of character to the upside. Once this swing high created a tiny body candle close above it. Once that happens, we simply set our buy limit at this change of character level right over here. And our stop loss is placed at the swing low, targeting a 1:2 risk to reward ratio. Price ran a little higher for a little bit before stopping you out at break even. Now, why is this the case? Remember, the 1 hour bearish fair value gap from earlier? You have to account for it as a point of resistance for price to push higher. What you can do here is take off majority of your positions once price taps into the 1 hour bearish fair value gap. Or you can refine your stop loss to this low here. Now this low right over here was the one that swept price before running higher and then creating the change of character. And this is how you can secure a 1:2 RR. Because there were more subjectivity involved in this trade, I will note this down as a loss. I just wanted to show you how this already profitable mechanical strategy can be further refined to give you even better results over the long term by filtering out these unnecessary losses. We have finally arrived to the last day of backtesting, day 5. I know I've said this so many times, but I just really want to drive this home. The first thing we have to do is to mark out the 1 hour and the 15-minute unmitigated fair value gaps, as well as the Asian range high and low. Right over here, we have an unmitigated fair value gap, just slightly above the Asian high. Similar to day 3, we have the unmitigated 15-minute fair value gap in such close proximity to the Asian high this time. We would expect price to draw towards that fair value gap instead, before continuing lower. So what I'm going to do here is wait for the fair value gap to be tapped instead. As you can see, after a while, price tapped into the fair value gap. Once tapping into the fair value gap, we will drop down to the 5-minute time frame to look for our change of character. And we see it right over here. This change of character formed when this swing low has a body candle close below it. Once that happens, we simply set our sell limit at this change of character level, with our stop loss placed at the swing high, targeting a 1:2 risk to reward ratio. And as you can see, right now, TP smashed. Another bonus tip that you can use since you stayed so long in the video is that you can stretch your take profit to the Asian low after taking off majority of your sell positions partials at a 1:2 RR point. So you can just stretch your trades and therefore stretch your profits and allow you to gain more money here. For completeness sake, let's just see what happens if you took a position after the Asian high was swept. Price would have run a little bit before stopping you out at break even to tap the fair value gap to send price toward your intended direction. And this is why it's super important to become patient for your setups and of course, look for higher probability entries. For example, in this case here, waiting for the fair value gap just sitting right above the Asian high to be tapped. Alright, so here are the total results from the 5 trading days. On the left side, you have the net P&L amount. And on the right side, you have the risk to reward ratio. Remember, we risk $500 per trade for data collection's sake. Now, it's super important to know how much was risk in each trade because the downside potential of a trade should always be considered first. It's obviously great to see profits, but when you lose, you need to understand how much you are actually putting on the line. The total risk that we will be putting in this backtest, meaning if we were to lose every single trade, that will be $2,500. This is super important to know because in reality, you could have had a pretty bad loss streak and lose every single trade you take for a period of time. The final result of the backtest was $5,650 in profit with 1 loss and $5,150 with 2 losses. Just to put a disclaimer out there, of course, if you're backtesting, it's important to backtest hundreds, if not thousands of trades. This is just to simplify and show you the process of backtesting. But I also hope that this video helps you break down the Asian sweep strategy, which got me to my first $10,000 in trading, and show you the results that you can get by sticking to a single strategy without hopping around and finding the next shiny object. Now that is it for this video. I hope this video brought you some value, and if you want to see these concepts and strategy being executed live, then make sure to smash the like button and of course subscribe to our channel and catch me trading live with thousands of other members every single day. And I'll see you guys on the YouTube live stream. Bye bye.